Now let's take a look at some questions related to the differences between traditional costing and activity-based costing. Activity-based costing being the focus of our chapter. And what we're going to do is we're going to start off with some objective type questions. So right up here it says, if the activities causing overhead costs are different across different departments and products, use of a plant-wide factory overhead rate will. Okay. So this is making, what they're doing is they're alluding traditional costing here and the use of a single plant-wide factory overhead rate. So let's read it again then with that additional information. It says if the activities causing overhead costs are different across different departments and products, use of a single plant-wide factory overhead rate will. So what we're talking about is we're saying, okay, we've got different departments, the amount of costs, the types of costs that we're incurring are going to be different. We have different levels of complexity, different levels of volume, but we're going to use one plant-wide factory overhead rate. And if that's going to happen, or if that's what is going on, what happens? So choice A says that, let's see here, the use of a plant-wide factory overhead rate will average out costs across departments. And I'm not exactly sure what we mean by that. Ultimately, what we are going to record our actual costs, but what we're trying to accomplish with the application of factory overhead is accurate product costs. So whether these costs somehow average out or whether it all comes out in the wash is completely irrelevant to what we're trying to do. Okay, because we don't want our products to be underpriced or overpriced. All right. Choice B says be in accordance with U.S. GAAP. Well, this is managerial accounting. It is internal costing. And again, everything is going to come out in the wash at the end. We might have to do some reconciliation or a massive reconciliation if we're way off with our costs. But our direct materials, our direct labor, those costs will be accurate. And then our factory overhead costs ultimately are going to be recorded based upon actual overhead incurred. Okay. So ultimately no matter what we do, we are going to be in accordance with U.S. GAAP. But we're not worried about that right now. We're worried about being as accurate as we can before we ever get to financial reporting. Okay. Choice C says cause distorted product costs, and this is actually going to end up being our answer, and it's because we're using a single plant-wide rate in a factory setting or in a production setting where we have different overhead costs among different departments and different products. So that was a pretty long-winded explanation, but I do want us to get off to a good foundation with our understanding of activity-based costing. Using multiple department factory overhead and rates, should say, instead of a single plant-wide factory overhead rate. And what did we say was the primary purpose of activity-based costing? Increased accuracy. Okay, and if that's the case, let's look at choice A. Results in more accurate product costs. And this is going to be our answer. Anytime we can use, anytime we have more information as opposed to less information, we're going along the right track. Okay, might cost us a little bit more money to get those accurate product costs, but if the results of our product costing are dramatically different, then we need to go ahead and spend that time, spend that extra money to get those more accurate product costs. Okay. Let's see here. What do we got? Which of the following are the two most common allocation bases for factory overhead? So this is basically a question that is really kind of a review. This question could appear in a chapter outside of activity-based costing, and what we have said and what we did talk about was we said that, in a job order setting, direct labor hours are very, very common, and historically direct labor hours have been a major cost driver for manufacturers. And then we also said that in an automated environment that relies a little bit less on direct labor, human involvement, that machine hours were important. So we could ask this question in a chapter on process costing. We could ask the same question in a job order costing chapter, or just a general chapter about managerial accounting. Direct labor hours and machine hours are single-handedly probably the two most common allocation basis, particularly in traditional costing. Okay. So activity cost pools so what are they? This is definitely an activity-based costing question. So activity cost pools. So if you think about a swimming pool and water, what happens to water when you put it in a swimming pool? Well, it accumulates. So let's look here. We look at B. It says cost accumulations associated with a given activity. Okay. So choice C, the cost driver is causing costs to be accumulated. So we want to understand, when we look at the diagrams, we often see something like activity pool and then an arrow down to cost driver, something like that. But in reality, the number of times we incur the cost driver, that's going to create dollars to accumulate in the activity pool. Our answer here is B. Activity-based costing says replaces a traditional costing process when appropriate. If you watch the PowerPoint videos, we said specifically that that's not the case. Choice B requires the use of a single predetermined overhead rate. Well, no. Activity-based costing is the exact opposite of that. Choice C allocates overhead to multiple activity cost pools. And that is exactly what activity-based costing does. What is choice D? May be inappropriate to use when there is a lack of correlation in direct labor or machine hours. Well, no, choice D, this is exactly when you would use it. We said above that direct labor hours and machine hours are, let's see, where was that question? Right here. We said that those are two key components, or two common allocation bases in traditional costing, but if they're inappropriate for an environment, well, we can use activity-based costing and pick some different cost drivers so that we can have more accurate costing. Okay, let's see here. This looks like this question is more related to, let's see here. Okay, that question is actually a traditional costing question. So I'm going to skip over that. Probably all of the calculation questions that we're going to do in this chapter are going to be activity-based. So we have a really, well, the question here is actually pretty short, but the choices are really long. It says, which of the following is the correct order of steps in activity-based costing? Okay. So what are we trying to do here? We're trying to increase accuracy. Increase accuracy. Now, in that last question, we said there was, choice D said if there was a lack of correlation between direct labor hours and machine hours, that activity-based costing may be inappropriate. And we said, well, no, that's exactly when you would use activity-based costing. So let's just take a scenario, for example, where in fact direct labor hours or machine hours are not appropriate. Okay, we would have to find out what are the activities that are relevant, and then what drives cost to those activities. So when we look at these choices, A, it says identify the cost driver that has the strongest correlation to the cost and the cost pool. Well, that's great, but my question is, what cost pool? Because it says what is the correct order. So I want to look for a question here. Let's see, assign. This one here, we've got a problem with that one. So let's look at B. It says assign overhead costs for each cost pool to products. Well, we're really into the process here. So I want to jump down and just look at the correct answer until you can understand why this is correct. I want to look at choice D. It says identify and classify the major activities and allocate manufacturing overhead costs to the appropriate cost pools. And then let's see, what do they have for the second step here? They say identify the cost driver that has the strongest correlation to the costs in the cost pool. In other words, what are causing those estimated costs to occur. Right? Then we're going to compute the overhead rate for each pool. So we saw some examples of that. In our example, we had $900,000 in the previous video. We had a $900,000 estimated overhead, and we said that of that $900,000, for example, that $300,000 was going to be based on machine setups. Okay, and so we said, okay, well, if that's the case, that satisfies this first part here. Identify the cost driver. That would be step 2, and that would be the number of setups. And in our video, we had an example of 1,500 setups. Compute the overhead rate for each pool and assign, okay, well, let's keep it. Compute the overhead rate for each pool. Well, that would be 300,000 divided by 1,500, okay, which comes out to $200. So that is step 3. And then find overhead costs for each cost pool to products using the overhead rates. Okay, so this is going to be our correct answer for sure, choice D. This video is starting to get a bit long, so let's go ahead and stop them, and then we'll look at some more multiple choice questions next.